shale oil boom could thrust the US ahead of Saudi Arabia as the world's largest oil producer by 2020. But will this lead to a crude awakening for their imports? Joining me to discuss is Dr. Thierry Bros, an energy analyst with Societe Generale and author of After the US Shale Gas Revolution. So, Dr. Bros, firstly, can you start by giving us a brief overview of this so-called shale boom? What is it exactly and how did it come about?
Yeah, it's all a question about technology and cost of production. What happened is in the US in the last 30 years, loads of technology were tried to extract this shale gas. It has become economical to do so since 2005. And right now we are seeing growth in shale gas astonishing. I mean, the growth in gas in the US in gas production was around 8% last year in 2011, and shale gas represented last year 23%, in 2010, 23% of the US total gas production. And what we are seeing further is the fact that due to technology improvement, even at today's level, we can see that prices are very low and perhaps slightly even below cost of production. We are still seeing growth in the shale gas production because costs are going down and efficiencies are going up.
What would you say are the actual consequences of this revolution?
The first consequences is, in fact, that because of this cheap gas in the US, utilities are burning this cheap gas to generate electricity and are not burning coal anymore. So what's happening is that the consequences is that the US is now exporting coal, and we have loads of US coal exports that are driving prices down. And what we have in Europe is exactly the opposite. We have cheaper coal coming from the US and expensive gas because our gas is either on a spot level or oil linked, but is at much higher prices. To give you again broad ideas, the price of gas on the spot market in UK is around $10 per million BTU, and the oil linked price is around $14 per million BTU in Europe.
According to your book, from 2010 to 2020, China's gas consumption should move from the level of Japan to the EU, and in 2020 China should be the third worldwide consumer after the US and EU. But what will be the main factors contributing to this?
I mean, China has decided to move towards more gas in its energy mix. That has been decided and planned, so therefore we know that the growth in China is going to be huge in the years to come. Just for a reminder, in the last 3 years, the composed annual growth rate of Chinese gas demand was around 20%, and we expect this to continue. So on top of doing what they can to extract more gas, be it conventional or unconventional, China needs to secure the resource, and they are signing long-term contracts either with Central Asia, with Turkmenistan, and there is also on the table a contract with Russia, with Gazprom, a big contract. It makes sense on a geographical level. I mean, the biggest resource holder, Russia, has a common border with China, but perhaps this is again going to be delayed or being to be postponed because so far China, I think, has secured enough external resource to meet its growing needs up to 2016, 2017, and after 2017 we could see one of the consequences of the US shale gas revolution that I didn't mention because I was looking at the short term. So if I move to the medium to long term, one of the consequences is US LNG exports. To go back to your question of the consequences, I was saying US coal exports now were the consequences of the US shale gas revolution. The consequences in more longer term, medium to longer term, could be US LNG exports. And the short-term consequences of the US coal exports is the fact that they are displacing Russian gas in Europe, and the longer-term consequences of the shale gas revolution could be that US LNG could displace Russian gas in Asia.
In Europe, analysts say that pipeline supplies are likely to remain the main source, although LNG imports will also play an important role, especially in Britain, where domestic supplies are dwindling fast. Do you agree with this?
I agree with that. Domestic supplies are dwindling fast. I would be more cautious on the LNG. So LNG is very flexible, and in fact, I would slightly disagree with the first part of your question. What we are seeing is a drop in LNG into Europe in 2012 versus 2011, and in our model in SG, we think that the LNG drops could be as much as 33% for the whole of Europe in 2012 versus 2011. So we've reached a peak in LNG receiving in 2011, and we could reach a low in 2012, and this could grow slightly, but very, very slightly, from the period 2012-2018, because there is not much new project in the period from 2013 to 2015.
And finally, what do you think the future has in store for shale? How real is the danger of the US becoming too insular, and will other countries follow suit in pursuit of their own shale revolution?
I mean, we've looked at the consequences of the US shale gas revolution, and what's happening is US is moving into shale oil, and this is what the big medias are talking about today after the IEA report. I mean, the US could become not only a gas exporter, but self-sufficient in oil in a medium or long-term future. But also, the other thing to look at is shale gas and shale oil in other places, and mainly in Europe. So we are trying in Poland to see if we can do some shale gas. It took 30 years to discover this and to master the technology in the US. It's not going to be done overnight in any country, because we need to understand the geology, and we need to find what's called the sweet spots to be able to produce this on a commercially basis. But again, Poland could be there. In France it has been banned, but I think the question is still on the table in the UK. And again, after the shale gas revolution in the US, you have an unconventional gas, not revolution, but an unconventional gas major production projects that are being right now being built in Australia. So that's my final thought on those issues.
Dr. Bros, thank you so much for your insights. It's been a pleasure speaking to you. Sadly, that's all we have time for at the moment, but for more exclusive interviews like this one, click back to DukascopyTV. Bye for now.